Broadcasting Foundation Board of Directors meeting.
Likewise.
Switch seats. No, you go there.
Gentlemen, good to see you.
Yeah.
How you been?
I'm doing well. How about you?
No complaints. Good to see you.
Sorry, I skipped by you.
Yeah, you're still part and parcel over there. Call the meeting to order, and first order of business is the approval of the foundation minutes.
I move that be approved.
Okay. Do I have a second?
Second.
Any discussion? All in favor signify by saying aye.
Aye.
Kathleen, do we have a quorum?
We do.
Okay. We have a quorum, so we can move on with business, so that the folks in the room, as well as the people on, the screen and, outside of the premises here, know who we are. I'm Mike Farrell from Huntington. I am the chairman of the West Virginia Public Broadcasting Foundation. To my left is Bill File. You want to introduce yourself?
Yes, I'm Bill Fowle. I'm the, chairman of the West Virginia, Education Broadcasting Commission.
Ted, can you introduce yourself?
Ted Armbrecht, former chair of foundation and now assistant chair.
God bless you. Right?
Sure. Hello, I'm Brian Lilly. I'm the chair of the West Virginia Friends Board.
Do you want to sit with us, or are you just going to hang out back there?
Back here with my friend.
More friendly back.
You know, we all look for friends in strange places. Congratulations, you found one. Trey?
Oh, I'm Trey Kay. I'm the host of West Virginia Public Broadcasting Sessions.
Okay. Gentlemen, our visitors?
Ian Flores, portfolio manager for NCB Asset Management, and we work with Burke and Herbert.
Clifton Clark, private banker with Burke and Herbert. Act as a relationship manager with you guys on your investment account.
John Jividen, trust officer, Burke and Herbert. Work really closely with Clifton and Ian.
Great. Thanks to all of you for being here. Rhonda, let you present the financial report.
Okay, good morning again. Hello, everyone. Newcomers. All right, so I'm going to divide this up, foundation and then Mount Stage, so we're not jumping back and forth across the page. Currently, for our cash, for foundation, we are, $150,000 less than last year.
$150,000 left in revenue or expense?
Cash.
Okay.
Top line, yeah, cash. Which, I think still ties back to, the political upheaval that we've been dealing with here recently. Underwriting, and grants is up considerably, thanks to, the hard work of the people in the development department and in the grant department. And our contributions and endowments are just slightly higher for foundation this year than last year. As far as our expenses go, our contractual and professional, expenses are, $5,000 to $8,000 more than last year. Our office expenses are down considerably amount. Printing is up slightly. Travel is up a little bit. Repairs and maintenance, and these are expenses for repairing things and renting things, are down quite a bit for this month, this last period. Hospitality remains pretty close to the same. Insurance payments have been made, and are not quite as much as we paid last year. Utilities, we really shouldn't have a lot of utilities there, so we've got $12 there. which probably needs to be reclassed. And our promotional, expenses are virtually the same. Our other expenses are considerably lower. I think we're all kind of trying to tighten our belts a little bit, so that we can, stay afloat and help everybody stay, employed, and we can continue to do the good work we do here at West Virginia Public Broadcasting. As far as Mountain Stage goes, our cash is considerably lower for Mountain Stage right now. We've been having a little bit of, an issue there. However, if you look down to the contributions and endowments, there's been quite a few, or several, sizable contributions and endowments for Mountain Stage, which is wonderful, because Mountain Stage is a vital part of what we do. We have received NPR payments. I think we still have about another $150,000 we're gonna get over the next few months. We have, we have $13,000 in grants, which is down a little bit from last year. Our tickets, so the road tickets for the, road shows are up considerably. This is more than likely due to the additional, marketing and the hard work of that department. Our contractual and professional expenses are pretty close to the same as last year. Office expenses are down slightly, printing is up slightly. Travel is down. I'm guessing that we've had a lot of, home shows. Repairs and rentals are up, almost a little over double. Hospitality is pretty close to the same as last year. Our association dues are, close to the same amount as last year. It's the same association dues. I guess we have been given a little bit of a break on that. Our promotions are about $5,000 less this year than last year, and our other expenses are down by about $7,000. Overall, feeling like we're moving in the right direction, with raising more money, tightening our belts to keep everything going in the positive direction that we're planning on. Any questions?
Any questions of Rhonda about any aspect of her report? I've got a couple. Looking at the expense for insurance, it appears historically we've had zeros across the board. They are insured, or they're no allocation for them, for their share of that premium?
No, it's not been allocated.
Okay, but they are
They are
insured
insured, yes.
under the policy.
Would you like to see an allocation there? Because that's quite possible and easy to do. It
I'd
hasn't been done in the past.
like, just send me an email, and then we can decide at the next meeting how we want to handle or discuss that,
Okay.
okay? Is there revenue that gets produced from us and them? His program?
I don't have any information on that, I'm sorry.
Okay, so I'll have Trey get with you and, get the proper recognition of, we've got a program that is national in scope, and I think we all want to know, what it is, how it is, and that's why Trey's here today. We'll hear from him, later in the program. With respect to the contractual and professionals, under our numbers, why are those up?
At this point, I really can't tell you for sure. I haven't only been in this position for about a month, but I'll put a little star by that.
Put a star by that, send me an email that explains and details, what those are and, why they are what they are, as well as the contractual professionals for Mountain Stage. I'd like to look at that.
Okay.
Okay? Any other questions? Thank you so much. Do I have a motion to accept the financial report?
So moved.
Motion, got a second? All in favor, signify by saying aye.
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 It passes. Okay. Next, the grants report, Americo.
Hello again.
Just to get a little bit more detail here, you'll notice that our active grants have moved up quite a lot in value due to the two grants that we mentioned in the earlier meeting. That being a $600,000 investment from a national philanthropic partner, and the Corporation for Public Broadcasting at $623,000. So that brings in $1.2 million into the newsroom. That will last for over a 48-month period with the national partner, and for 4 years for the national funding partner and 2 years for CPP. I also do want to point out a few things here that you'll see. We have a few grants from WIDA, which is the Ken Burns American Revolution series. We also did earlier in the year caregiving, which was also through WIDA. We've also worked, and this is not on the list because the grant has closed. We had a grant with our education department with the Fred Rogers group for the Be My Neighbor Day, as well as GBH in Boston. It was a really cool project where kids submitted videos. They'll be risen up to the national stage. So the interesting thing about the WIDA grant is that this is not only allowing us to do what we call an engagement campaign through marketing and hosting really impactful in-person screening events. We are also having funds for Chris's project, Always Free, which is looking pretty good, I gotta say. So internally, these impact all the different departments, and I really gotta say that we've really developed a system where when we get funding, we have basically a go-to-market plan that involves and touches each department. And above that, it's showing that organizations like GBH, WIDA, Fred Rogers are showing the confidence in us to be able to execute programs like this. And I think we're in a really good position, and we are really working very efficiently across all departments. So, and that includes us and them as well, of course. And the pipeline, there are some large numbers here, but I want to underscore that these are either grants that we've applied to in the past and will be reopened, or these are grants that I have active proposals submitted. So the largest one you'll see at the top is the NGWS. This was formerly being released by the Corporation for Public Broadcasting, but in reality, it's a Department of Homeland Security FEMA grant. And this, I am in touch with our partners about when this may reopen, but this would give us tremendous support to upgrade our tower system and hopefully put a generator in Beckley and Charleston and make various upgrades where we really need them. Beyond that, you may see the Public Media Bridge Fund and the Rural News Fund. This is a group of investors and philanthropic, what we call pooled funds. You will hear Press Forward Central Appalachia, Invest Appalachia, amongst some other groups. That what I want to say is I'm really seeing a trend here of two things, sustainability and collaboration. Many of our grants, we get funding, we do special project engagements, we submit the final report, and we move on to the next one. We really got to start thinking about partnering with other media outlets and other organizations throughout Central Appalachia, Western North Carolina, Eastern Kentucky, Tennessee. I'm trying to forget where some of these other organizations are, but they are very much focused on Central Appalachia. It's front and center for them. And I look forward to continuing these conversations with them on the national scale.
Are all of these projects where we are the sole operator, so to speak, using our employees to produce the ultimate work product?
For the two large grants, we are partnering with WEKU in Eastern Kentucky to expand our Folkways reporting corps. That will give us reach, and they're already experimenting with these news sharing concepts where WEKU is actually partnering with their local newspapers in some cases. I think the Kentucky Lantern is one that comes to mind. So they're running stories from these smaller publications, and they're also sharing their stories amongst their group of news organizations, which really gives the smaller guys more coverage and allows the larger stations to have more reach. And you will find that through our partnership with the Appalachian Mid-South Newsroom, which is a group of different media outlets throughout Tennessee, Kentucky, and West Virginia. We are the anchor station in that group for West Virginia, and I've had just tremendous conversations with them. There are a lot of national players that are in that group from NPR and other stations that are really bringing new ideas forward. So I will have more developments on that front as we go through them.
But I'm gonna ask.
America?
Go ahead, Carol.
I'm sorry. I was just wondering, the King Cole and the other national funding partner, now, is the 600 and the 623 all go to WVPB? Or is it shared with the partner?
Well, they're shared in the context that they're both supporting the newsroom. However, they are structured a little bit differently, each grant. So we can look at it as a $1.2 million investment, but the two of them are structured a little bit differently. And I'm happy to provide more details offline.
Anything further on that issue, Carol?
No, thank you.
Starting to say is, I'd like you and Kathleen to be a two-person committee to prepare a report to deliver back to this board about other revenue-generating activities. Okay? We are in a position where the Friends have done yeoman work trying to make up this $1 million deficit we have with the collapse of Corporation for Public Broadcasting. And I want you to tell me everything you can find out nationally and regionally where our assets, our talent, can be used to generate additional revenue, and see whether or not there's an appetite here to sort of become independent contractors to other entities to do what they're not nearly as good at doing as we are, and consider those two things. Is that something, Kathleen, you and Americo can do? Anybody else you want on that committee?
Let me think about it.
Okay. Let me know, but I think we have to be realistic that we're not going to invest our way out of this by hitting hot stocks every day. Is that a fair assessment, gentlemen? So let's look at our resources as limited in terms of numbers as they are, because we have a lot of vacancies, but look and see how we redeploy those and produce more income. That's part of our due diligence as far as I'm concerned.
I will say, whether you like it or not, you are speaking the language that I'm hearing on the national stage. So
Okay.
I'm really happy to prepare that for the board.
I'm not that prescient. I'm just appreciative of where we find ourselves, and can't complain about it. It's what we have, and it's what we have to address. So if the two of you will become a team of two, committee of two, and if we need to add somebody, you'll let me know, and we'll make that appointment. Okay?
Okay. Thank you.
Thank you. Any other questions of America? Bill, anything from legal?
No, sir.
Linda, are you with us? Linda Goldberg?
So did you get my report? Did you get my report?
Yes, we did. You want to explain it to us?
Okay, sure. So you have the list of investments on one side of the page, and you have the list of activities since our last meeting, the other side. The statement for the end of November was not out as of yesterday. So you have the October 31st prices. And most of the investments are higher now than they were 3 months ago. A couple of them are lower, but it's not significantly lower. Overall, the total investments are higher than they were 2 months ago. And you can see the yellow highlighting that we're certainly ahead of where we were last December. That's basically it.
Thing. We applaud you
Yeah,
for
it's a
that.
good thing. Well, it's not up to me. It's up to John and Ian and Clifton. So they're doing a good job of managing it.
Is that why they
One of
travel
those,
as a threesome?
Keep me out of
yeah.
trouble.
So,
Like each other.
well,
Smart man brings back.
one of those U.S. Treasuries goes out to 2035. So I think they're taking the long-term view.
Good catch there, Linda. That's very good.
Gentlemen, why don't you jump in at this point in the agenda and sort of expound upon what Linda has set the table for and tell us where we are and where we're going and how we're doing.
I don't think everybody has.
So we have the handout here. We'll start with page 1 under market scorecard. So we'd like, before we get into the actual accounts, just give some perspective into what happens in the market, and then you give why the performance for the investments are the way they are. As of October 31st, you can see on there every single major asset class index was up. It is worth noting that under international markets, up 26% and 32% year to date. And a couple of things there. We all hear about the S&P 500 and the AI. What's really interesting to know about international investing is they have underperformed domestic equities for probably a good decade. And so this year they've outperformed for two things. One is the weakening of the dollar. Secondly is the whole NATO defense thing that the administration told them. And so now they are spending 5% of their total GDP on defense spending. And so what happens is the financial guidelines that most European countries have, now they're starting to spend. And it's very specific. It's always a defense industry, industrials type of companies in there that's really doing well in that particular sector on the international front. If you turn to the next page, putting it in perspective here, volatility is always going to be in the markets. On average, the average pullback is about 14%. Average return in any given year is about 10%. So far this year, our pullback, if you remember in April, first came here with Liberation Day, when we had those 3 days of just, getting whipsawed. Our biggest pullback was 19% on the S&P. If you look at the NASDAQ, which is a tech heavy, it actually hit correction territory there, down 25%. But as I kind of noted with a lot of our clients here is you don't take those 1 to 3 specific events and define your investment policy, because it's always a recipe of losing money. So what we look at here is you look at the next page. You just kind of look at the fundamentals of the economy and GDP here. And this is just, composition of GDP. What's really interesting is GDP is composed of the U.S. economy, is the U.S. consumer. They account for 68% of GDP. So that's why they always say, how's the consumer doing? What's worth noting is, if you look at consumption, your U.S. consumer, it contributed 1.7 to second quarter GDP. The next line below that, it's really interesting. So this only accounts for 4% of the total GDP, and those are the AI-driven capital expenditures. You hear about them spending $500 million, what have you. So it is so significant that for the second quarter, it actually added 1% to GDP. That's a big, huge, addition on there too. The second thing is under net exports. If you can see, that's always been, and the first quarter was a negative. That's another, the tariffs that got put in there. So it's also adding to the GDP in there too. So two very unusual circumstances that's really kind of pushed these markets higher. And what's really most important is tech companies are the ones that's going to really be the ones that's going to determine economic growth going forward. And as that continues to grow, not only is the market continue to push higher, but it's also going to have some really positive effects on the U.S. Economy here. On page 4 there, I always say this, the markets are really simple. It's earnings, what someone is willing to pay for this earnings. And so as long as there is earnings growth, the market's going to push higher. And this one just tells you that 7 of the 11 sectors have growing earnings. And so that's really the most important. It's because there's not a better single forward-looking indicator than the markets, because they're always looking at forward guidance for these companies. As long as you have earnings growth going forward, this market's going to push higher going forward in there too. But obviously, tech's leading higher in there too. Financials is starting to be incorporate AI into their business models, and so you're having these companies become more efficient. Productivity is going to increase in their efficiency, and it goes down to the bottom line, which is your earnings growth in there too. Page 5 is, I thought it was just very interesting to see what kind of economy we're in. These are the top 10 companies in the S&P 500 by market cap for every decade in there too. And so for 85, you can see DuPont, Kodak, Royal Dutch, Amoco. Not a single one of those companies in 1985 is in the top 10 for this year. And for this particular decade, if you can just see, all those names are all tech-related companies in there too. And so there's this shift in the U.S. economy. You go from an agrarian type of economy to an industrial type economy, and then it crosses over to a service center type of economy. Now we have shifted into this, what we call Industrial Revolution 4.0. It's a tech-driven type of economy in there now too. So this chart just kind of gives you an idea of what kind of economy the U.S. Economy is in, and what companies are really driving the bulk of that growth. On page 6, I talked to you a little bit about how the international markets are doing, and there's a direct correlation between the dollar, the weakness of the dollar, and the strong performance of international economies. We continue to see that as long as there's uncertainty over tariffs and uncertainty over the amount of the deficit. And so what's going on here is, as the dollar continues to weaken, then you're going to have strength in the international economies in there too, which you have some allocation in there. And lastly, we've had going to be 3 consecutive years. And so people are it's a typical response, the wall of worry, right? This has to end. Something's going to blow up, and so they always find something to do that. We're still very constructive on the rest of the year and 2026. Couple things in there too. They had this government shutdown. I had this chart. It's happened 5 other times before. The most notable thing was 100% of the time, 12 months out, a year out after the shutdown ended, the S&P was up on average 12%, 100% of the time. And so I tell clients that what the markets want to do is, yes, there is that uncertainty. The markets like certainty. So once that was done and over with, they go back to fundamentals and they go back to earnings. And so once they see that earnings continues to grow, then that's when the markets really value those stocks higher, equities higher too. So this one here, what they call a slingshot effect. If the markets pull back 15%, this one right here says next year's return, 100% of the time on average it's up 19%. And so the point there is there's always great opportunities in market pullbacks. And our human nature makes us do the absolute wrong thing at the wrong time, right? And so as long as those companies continue to be viable and if they continue to have good, solid earnings, we expect the markets to continue to push higher in there too. And lastly, another reason why we're remaining very constructive is the Feds. And so the Feds have officially pivoted away from a quantitative tightening bias to a quantitative easing bias now. And so with that type of monetary policy, there's two things that really drive the markets and economies. Fiscal policy, which we had the one big beautiful bill, and monetary policy, which is the Feds and now cutting rates. And so they cut rates in September. Their next meeting is December the 10th. The markets at one point had a 90% chance that they were going to cut rates. Then they kind of dropped down, and then we had some. So their dual mandate is low inflation and full employment. And so the inflation has stayed around 2.8, 2.9, been sticky, but now they're concerned about a weakening job market. And so the markets now are saying that they're probably going to cut rates in December, 2 more rate cuts next year. And so when the Feds are cutting rates, there's this term called "don't fight the Fed." You know, don't sell into that. That's a good opportunity, and that's a huge tailwind for the equity markets. Second thing is active management. Typically, they underperform their index, their benchmark, 60% of managers. This is one of the worst years for those stock pickers. 22% of them are the only ones that are beating the index. So 78% of active managers. So at the year end, guess what? So if you didn't own the NVIDIAs, the Palantirs, the Abcos of the world, guess what those managers are going to do? They're going to buy this. Right? So the fear of missing out, like I call it window dressing, so that at the end of the year, even though they underperform, well, we own these names, right? And so those additional dollars will go push into those names that have done well and continues to push the markets higher in there too. So that's why we remain constructive on the equity markets. The portfolio itself, this is as of 10/31. We are right in line with your investment objective. We're right at 65% in equities, which is your target allocation. We have about 35% in fixed income and cash equivalents. As Linda pointed out, buying a 4.25 Treasury bill out 35 to 20, 35, 10 years. And so the thinking there is you have a Fed that's cutting rates, and so lower rates equals a nice market value for your existing bonds, because if you have a nice coupon on it, all of a sudden, if the 10-year goes below 4, your 4.25 becomes a little bit more attractive in there too. But the other thing too is I'm willing to get paid 4.25 for 10 years on a tax-free investment, which is your U.S. Treasury. I think that's pretty good, considering where we were at one point when it was 1%. So I think that's a good level in there too. We did have on page 3 on there just a breakdown of the active portfolio in there too. Since we started this, not quite in the first quarter, I think it's right before Liberation Day that we started this account. Thankfully, we stayed cash, so we had cash in there to kind of avoid all that downside. But since then, the second quarter and the third quarter and the fourth quarter, net total since we started this account, we are up $342,000 in that short, less than a year for that portfolio in there too. I think that the investment policy statement created by this board to drive the allocation of this particular portfolio is acceptable. I think it's prudent. you have enough equities in there to provide the growth, but you also have enough fixed income in your portfolio to hedge against such volatilities in the markets. And I think it's proven by the returns you've had here so far. So I don't, if I'm going to have opportunities, we are fully invested in the equity markets. So if I see opportunities, what I would do is I would trim certain sectors in there, especially the mutual funds that came by, and reallocate that into certain sectors that I feel will have better growth opportunities going forward.
Are there any questions?
Yeah. We're still looking for 100% return every year.
For the record, we cannot guarantee anything. We can only say that we will do our very best.
Yeah, I can always hope.
Hey, for those of us that are online, could we get a copy of the information that they shared, please?
Kathleen will send it to you.
Thank you.
Thank you.
Ted, you had a question or comment?
With what's going on in the world today, war, so forth, what do you see as the principal factors that are going to affect the market? If the war is in the Ukraine is ended tomorrow, is that a great factor? Or what kinds of things do we look at?
Yeah, so geopolitical risk is always a factor that the market looks at, not necessarily drive something. And so that's already been discounted. Now, as you said, if that ends, then it's another positive tailwind for the markets in there too, because that's just another uncertainty or unknown out there that the markets, okay, we'll put that aside. And so now they're, dealing with more sovereign countries in there too, yeah.
Recognizing that you do not have crystal balls.
Yeah.
That precisely tell us there are a couple of issues that I'd like you to comment on. One, we are on the brink of a Supreme Court decision regarding the tariffs. Is there an implication one way or the other if they disallow them and require a payback, or they disallow them and say, just start over again, whatever? What's your view of the Supreme Court decision, its impact on our portfolio or the economy generally?
Yeah, so if it is disallowed, okay, so it's going to take a huge hit in the budget. And so therefore economic growth is going to slow down significantly, which would affect the markets in general. But having said that, once all that information is digested by the markets, one thing you can always count about with companies in the markets is they will adjust accordingly, because the bottom line is earnings growth. So while they might take a quarter or two of a hit, what you can always expect for those companies is they will recover quite nicely and continue to push higher.
Second question, given the experience you've had in associating with us, is our formula and our allocations appropriate now, or are there tweaks to it that you recommend?
I review your investment policy statement and your investment allocation quite often, and I think that you are in the right asset mix. The one thing that I do is just changing and making some tactical reallocations within, like for instance, equities, to shift the monies in there according to what we feel is the market's movement going forward. So overall, long-term target, I think, is very prudent at 65-35 days.
And I don't think you were here at the last meeting. We actually discussed that a little bit from a standpoint of, we stand ready in case you have a change in the other side, which would be the spend of your account. So, when we look at an investment policy statement, we also like to look at a spend statement. Our time with you so far, we've had basically invest the money. We're not taking any money out of the account. So, recognize that if something like that were to change, we would also look into that and maybe potentially look into income a little bit more if you were planning on using some funds.
Well, you anticipate my next comment, which is we are in a cycle now where we understand the impact of what's happened nationally. We understand the response by our friends of public radio and television, and how they have worked hard to cut that in half. We are more knowledgeable about our grant capacity and what we have in the pipeline, trying to achieve more. And it seems to me that it's probably prudent to look and say there is going to be a greater demand on spending out of these funds over the next 6 to 12 months. Is that here today? Not yet, in my opinion, but it could be. Depends on how well the performance comes from the Friends, and continuing, we've tripled the number of people who are participating. We have increased year over year by 500,000 the contributions, which I think are both significant. But the bottom line is, I think it's going to be Americo and his team of going out and finding additional grant monies. And as you've already heard, this new committee I just formed of finding revenue-generating opportunities that we need to look at more closely. So my expectation is somewhere over the next 3 to 6 months, we may ask for a sit-down with the Finance Committee and say, here's where we think we are, here's where we think we're going. How do you recommend that we start pulling things out and making them liquid for expenditure? So as you look at things, yes, we've got a 10-year investment, but most of this stuff looks to me to be pretty liquid. Am I correct?
Yes. Yeah, most of these are very liquid, and we do have a money market fund. And so the nice thing about having liquidity, and especially a money market fund, is that if you just happen to need money, right, you don't want to ever sell into a down market. And so letting me know ahead of time, this could be an anticipated expense, so you can set that money aside. It doesn't have any market movements. It still earns you a little yield in there too, but you're not at the whims of what the markets might be.
Yep.
So I think we have a good understanding. Anybody else have any other questions that?
A couple of quick administrative
Please.
matters, Kathleen. We should say that there were a couple of additions this last quarter to the account to the tune of about
Let's let him finish that.
to the tune of about 108,000. So that was a good thing, and been working closely with Linda as well. And we did have a system conversion from our legacy system to the Burke and Herbert Trust Accounting system. It's behind the scenes. All monies came over. Everything went well. It happened on October 31st. So we do have a new online internet system, which Linda is up on and has accessed it. And according to her in our conversation several days ago, it was a thumbs up as far as that goes. So good system conversion.
We thank you for that. We welcome Burke and Herbert and their strength and their employment of the three of you.
Mike,
Yes,
this is Barbara. I have Fleischauer. I have two questions
sure.
for our guests. One, it sounds from what you are saying that you don't think we are going to have an AI bubble that will burst. Maybe you could talk about that a little bit.
Sure. That is the wall of worries that people always talk about, and they always bring out the .com bubble, right? So one significant difference between that time period and what it is now. So during the .com bubble, you had companies that weren't making money investing in other companies that weren't making money. It's all speculation, with multiples going up to the 200 PE because they just weren't making money. The difference here now is you have companies that are flush with cash. So a lot of the CapEx being done is from free cash flow. So hardly any debt being used out there. And so that's a big difference in there too. And so with that, we think that what's going to happen is you're probably going to have a limited number of companies that are going to grow into the $10 trillion market cap, and they're the ones that are going to lead this. And so with the thinking here, with a lot of the what we call hyperscalers, Amazon, Meta, is they don't want to fall behind in this AI race. And so the commitments to really spend on this is very significant. Yes, there will be a bubble, but it's going to be those companies that are out on the ancillary companies that have participated but don't really have the earnings. I'll give you a couple examples. Quantum computing, it went from 88 cents a share to $20 a share. But if you look at their balance sheet, they have lost money every single quarter. But because they are a quantum computing related to the AI, it gets pushed higher. And so when something like this happens and people look at the fundamentals, they're going to sell off those companies that aren't making money, but then keep those bigger companies that actually have free cash flow. But good question, though.
Thank you. My second question relates to the defense spending internationally, and I'm also wondering about nationally. Mike, I did hear what you said at the last meeting about educational programming, and I watched the fascism show last night, which I thought was very interesting. One of the things they talked about with Hitler was that economy was propped up by defense spending, and that there were, sort of internal flaws in that idea. Do you think that, and actually I can't explain it very well, but basically that it was kind of a house of cards. And do you think that we are at risk because we're relying on defense spending nationally and or internationally?
Well, I can tell you that defense spending is a huge chunk of the budget in there too. But I mean, capitalism at its finest. Not all companies in the S&P 500 are defense related. Amazon is not. They cater to the 6 to 8% of consumers that account for the U.S. economy. Meta is not. And so Palantir started in the defense industry and now most recently became public and now is opening to the private sector. So defense does play a role in certain companies like Raytheon, General Dynamics, GE, Lockheed Martin, L3, Harris Internationals, and those specific companies are very dependent on that. But when you look at, I would say the Mag 7, they're not.
Okay, thank you very much. And thank you. I agree. It was an informative report.
And I guess one question I would have, internationally though, I mean, since the European countries were funding at such a low level before, the fact that they're spending up to this now is not really that big of an impact on their economies overall as well. Would that be fair? Or
I mean, it is because they are the European economies are so financially strict, so much so that on any given year, I always tell us, on any given year, the European zone is a 1.5% growth. That's their GDP, 1.5%. That's how strict they are. And the financial system and the banks run it. Like they are so tight, whatever it is. So now all of a sudden, they increase the defense spending. And so it's the industrial companies have really come out now because now there's money flowing to them. How long that's going to last, I don't know, because they're two completely different economies. My daughter lives in England, and they have the national health system there, so they got to pay for this, right? So it's not going to be as free-flowing as the U.S.
Sure.
But there's all of a sudden, when they opened the spigots here, it really gave a boost to those international markets. And after being 10 years behind domestic, like significantly, this is a nice surprise.
So it'd be a good opportunity for 3 or 4 years.
Yes, it really is. Exactly. You're right.
Ted, you had a question or comment?
Yeah, I think part of my question was answered, but do I understand that from the beginning funding, second quarter 2025, 4,231,000, that, to the final current figure, we invested another 108,000. Is that?
That came in the fourth quarter. Yeah.
Of the difference shown here, you had 108,000 more to spend, right?
Yes, correct.
Did we take anything
That's
out in that period of
That's the
time?
money that, Ted, that money, the 108,000 is shown on the reverse side of the table. It's shown in the activity for the bequests and donations received.
Just to answer you quickly, no, you have not drawn money out from this portfolio at all. Yes.
So, I got to interrupt. We did not take anything out this year.
No.
Thank you.
Mm-hmm.
And that is one of the pending questions of, as dynamic as this situation is, I think prudence suggests that we have to plan and look at our options and be in sync with our investment team here to make sure they understand what we have to do, and we have to keep close tabs on what the Friends have been able to do in terms of looking overall at resources and what monies we have and how we're going to spend them. Is that a fair statement that you agree with?
Yes, absolutely. Actually, when you hear the news about cutting and spending, so we kind of had a quick conversation and anticipating. And then we were waiting to say, okay, we need this. So, we actually carved out some monies in there and put it in money market. So it's very liquid. Just in the instance that, or in the event that you would say, here's what we need, for that. So.
Okay. Any other questions or comments? If not, gentlemen, it is always a pleasure to see you, particularly when the numbers look as they do.
Well, thank you so much. We
Make
appreciate
this the pattern.
How come all my clients ask that?
Your goal now is to increase next year's
Right.
by the same 15%.
Oh, okay.
That's better than the 100%.
I know, right?
Something like small ass.
That's right.
Thank you.
Thank you.
Welcome to stay if you'd like. You're free to go if you want. Our next presentation will be by Trey Kay, and educating us about all things us and them that we need to know or thought we did know. Good job.
Okay.
Thank you. Appreciate it.
So, Michael, thank you for inviting me today, and I just want to reiterate, I think that in many ways, the mission of my talk is that in some ways I've been doing this Us and Them podcast and radio broadcast for 10 years, and that in many ways some people don't know me or don't know so I wanted to give a little bit of a talk about that.
That's why you're here.
That's why I'm here. So I want to start with something very simple, and that is that I'm grateful. I grew up in West Virginia. I was born in Fairmont, and I grew up here in Charleston, and public broadcasting helped raise me. I was a dyslexic kid, and shows like Sesame Street, The Electric Company, Zoom, and Mr. Rogers didn't just entertain me, they opened the world to me. They helped me learn how to learn, and they made me curious, and they made me feel like there was more beyond the hills where I grew up. And here in Kanawha County, I listened to the radio a lot, AM radio here in Kanawha County. I see some gray-haired people in the room. Does anybody remember Al Saley, Sleepy Jeffers, Super Duper Charlie Cooper, or Ernie Saunders? Those are the people that I listened to growing up here. And I'm wondering if anybody remembers the precursor to Mountain Stage, which was the Capital City Jamboree. those West Virginia voices were a big part of my life, and they grounded me in feeling the soul of the place where I came from. And they were about the here, the humor, the culture, and the stories of my life. Later, I left West Virginia, went to Ohio University, and then I moved to New York. And that early relationship with sound and storytelling stayed with me. When I got to New York, I was a creative person pursuing acting, playing music, and performing in improv comedy. Those early creative endeavors led me to do work with New York's WBAI, and then eventually led me to New York Public Broadcasting, which is WNYC. And I worked on several programs there. I was one of the original producers for Studio 360 with Kurt Anderson. And then eventually I worked with Marketplace, This American Life, the New Yorker Radio Hour, American Radio Works, and PBS Frontline. And along the way, I felt the pull to come back home. That pull came in the form of a documentary project about the 1974 Kanawha County textbook controversy, a conflict that I lived through as a kid. That story brought me back to West Virginia, and it changed how I see West Virginia. I realized that we weren't marginalized, we weren't just a footnote, that we were central to the American story. And thanks to the support of West Virginia Public Broadcasting, my documentary, The Great Textbook War, was honored with the highest national awards in journalism. And thanks to West Virginia Public Broadcasting's former executive director, Scott Finn, that work was the beginning of Us and Them. And for that support, I am deeply, deeply thankful. We launched Us and Them in 2015, and for nearly a decade, that program has tried to do one thing well, to sit inside the divisions of American life and listen. We've reported on the fault lines that run through this state and run through the country. We've documented battles over class disparity in episodes like Killers and Creekers. We've focused on racial divisions in episodes like Confederate Reckoning and in Dixieland, I'll Take My Stand. We've told stories about opioid addiction, substance use disorder. We've covered criminal justice, education, religion, workforce changes, economic decline, as well as difficult subjects to talk about like abortion, gender issues, guns, drugs, immigration, the wars on drugs and terror, and January 6, 2021. We reported during the pandemic when fear and misinformation were everywhere, and West Virginians deserve careful, fact-based, compassionate reporting. Our work has received national recognition in the form of National Edward R. Murrow Awards, Public Media Journalists Association Awards, as well as regional honors from the Virginia's Associated Press broadcasters. That's national attention for work that came from right here. And there's something else that I'm incredibly proud of, that most of our audience is actually outside of West Virginia. People in California, New York, and Washington, D.C. And that matters because we believe that telling West Virginia's story honestly and humanely is not just a local service, it's a national responsibility. And I want to be honest, because I've been a part of both of these meetings today, we are at a really tough moment in public broadcasting. And as we've discussed multiple times today, the federal government has eliminated the funding from the Corporation for Public Broadcasting, and our state has reduced funding for West Virginia Public Broadcasting. West Virginia Public Broadcasting is smaller, much smaller than when I started this work, and that's a hard reality. But here's what I believe. I believe in the mission of public broadcasting, and I always have. And I believe in the people who lead it, and even though we've disagreed at times, even in those moments, I've never questioned for a moment, for a second, the dedication of the people of this organization and the mission of public broadcasting. And I want to say that I believe Kathleen Brady, our new interim executive director, is a public broadcasting true believer. And in the meetings that I've had with her, it's put bounds in my step in continuing the work that we've been working on. And I know that we have challenges ahead, but I do not want this organization to disappear, and I do not want to sit on the sidelines. I want to help. I believe that Us and Them is doing the work of this moment. Polarization is the story of our time. People don't trust each other. Institutions are fragile, and communities feel unheard. That's where our work lives, and I believe that we can scale it. We have a proven track record that not only with Us and Them produced shows, but with live events across the state, 3 of them that we've done since June. We've built partnerships with Ohio, Kentucky, Tennessee, Virginia, Texas, New York, Massachusetts, and California. We've experimented with face-to-face conversations across the divide in our Us and Them dinner party episodes that we've been doing since the 2020 election. And Kathleen and I have already been talking about a new music-based storytelling project that we have in development, because we believe that music is another way to connect people when language fails. And I want to grow this work, not just as a program, but as a model. I want to find out ways, how do we connect more deeply with West Virginians? How do we help them feel seen? How do we partner, not compete with other media organizations? These are the challenges that I'd like to help with, because I believe West Virginia's voice belongs in the national conversation. West Virginia Public Broadcasting helped shape me early on. It helped launch my work. It offers the freedom to experiment, to grow, to fail, and it gave me an opportunity to find my voice. I want to help sustain it. I want to be part of the solution, and I'm ready to do the hard thinking, whether it's financial models, partnerships, new formats, community engagement, because this moment that we're in right now demands creativity and it demands courage. That's what I got to say.
Thank you. So let's follow up at that last step onto the bridge of creativity. What are your thoughts as to what we could do with you, through you, Us and Them, or any new franchise that A, could be a voice for West Virginia, B, produce revenue to sustain and deliver that message, or C, just create a work of art, so to speak, that others will want and crave, just as all those legacy programs that you discussed from WNYC, which are, part of the Hall of Fame of public broadcasting.
Yeah, it's all based on really what I think is the general conundrum from public broadcasting writ large, which is how are we going to have a business model to sustain it, and how are we going to continue to address relevance? How are we going to be relevant? When I just had a meeting this past weekend with an African American woman on the West Side, who I know for our program, and perhaps even with Eric and some of the things that they've done with the news department, I know that these are stories and these are issues that are affecting West Virginia. This woman was a part of that, and yet I don't feel like they feel connected or heard. That in many ways, I came away from that conversation wondering if all the hard work that I've been doing for the past 10 years is something that's connecting with this woman in particular. And I think that's part of our moment right now, our challenge. I have a good team and a good people who I've collaborated with. One of them, which was not necessarily my idea right away, was the idea of forming this us and them dinner party. That's something I'd like to do more of. Americo has talked a bit about the live events that we have done. We've done 3 this year. One of them was integrated with the caregiving event. One of them we did in Shepherdstown with regard to the Ken Burns American Revolution. We have another one related to the American Revolution that we are going to do at Marshall in the new year. And then we just did another event at Marshall with regard to the Maryland Public Broadcasting documentary about Thurgood Marshall. These are fantastic opportunities to work in collaboration with our public broadcasting partners outside of the area, but that what we believe that we've been able to do is to find a way to take that material, that content, and connect with the greater public in West Virginia and bring them to these live event episodes. And basically what we are doing is generating content from that shows how it is that this organization is engaged with the people from the state. That's how I think that what we're doing here in West Virginia. But Mike, what I hear, and I've kind of been admired some of the things that you've done today where you've said, you've kind of given people kind of homework to do. You haven't given it to me yet, but I think that in your question, I'm hearing the homework of how is it that we can scale this? How is it that that we could make partnerships with public broadcasting stations here, organizations in Central Appalachia, because that's been part of our mission. I mean, I would love if Us and Them was as popular as This American Life or something like that, and that it was syndicated as robustly as a program like that. But one of the things that we have been looking at doing for the past couple years is to really expand our footprint in Central Appalachia. I can tell you, I had a really encouraging meeting with Kathleen just a few weeks ago, and I left that. I'm not knocking any executive directors before, but it sounded like she and Kathleen, you can yank me in on the leash here if you want to, but it sounded like she was kind of like saying, "Go for that. Let's do that. This is an opportunity." I think that with the budget cuts and things that look dire, I think that this may be an opportunity for us to actually really think big and try to do things that we haven't done before and come together as an organization to support this important work, which is, as I come back to and what I said in my statement, I think that the things that we work on Us and Them really are reflective of our times. I think the culture war divide right now is the issue of our times, and I think that one of the things I've said about being a part of West Virginia Public Broadcasting, when we got our first big grant from PRX, I said, we're a national program that is telling the story about the culture war divide. What better place than West Virginia to tell the story of the culture war divide? We're the place of the Hatfields and McCoys. We're the place that was ripped out of another state. I mean, we know conflict and culture divide here, and I think that in many ways, Mike, this is an opportunity for us to possibly lead on that here in the public broadcasting universe, and to find financial models to back it up.
What you've heard is folks as conservative in their training and approach to doing their business, the Burke and Herbert team, on their own, created a fund, put it in a money market fund, because they knew we'd come knocking at the door saying, we have less money than we had. We're going to need to spend that which we've been saving for the rainy day. what enticed me to invite you to come is you reached out, you came and you sat with me. We had a terrific discussion about who you are, but more importantly, what you do. And part of this whole process is there are prejudices against public radio
We heard some this morning.
by different segments of our society that I think are misplaced. And I think your show provides a mechanism, a medium, to address those and recognize that in this society, it's not all fake news, but it is a earnest dialogue consistent with what the First Amendment guarantees to each of us. But the homework assignment for you, and there is one, is to prepare a business plan that demonstrates how we can monetize what you have done on this level and grow it so that it can expand your program, but also employ, pay for, subsidize some of our existing talent here, and not limited just to radio, but think about television, think about other mediums where we can make a difference, because you've been inside the system. You have been in New York City where all things are grander and more expensive, and you've seen it how the mothership of public broadcasting, WNYC, does it and does it well. I think you're the perfect person to say, here's what we can do. Now let's see what we need to do to make a difference. And
I have a question. I'm just wondering about marketing outside of the traditional public media space. I mean, how many people are listening through the podcast or whatever that are not, public broadcasting listeners generally? I mean, do you have any idea about that? And if we don't have many, how can we reach those people?
Carol, just to make sure I understand your question. We have metrics on how many people are reaching, with the podcast downloads, et cetera, and we know where they are. And Mariko and I and Liz and I can provide that information. We can provide that to the board. I'll be honest, that there was a time ago when those numbers were more robust. And there was a reason, I think, why they've declined somewhat. Some things we can control, some things it's just been the change of the interest in podcasting. But and Carol, I'm kind of, I hope that I'm answering your question by kind of addressing what Mike said. I think that just some of the things that you're suggesting for my homework, really, in many ways, just the mere fact that you're asking for it seems like oxygen to me. Nobody's asked me to do that before, and the possibility or the fact that you're interested in that I'm excited to take that on, and to make a plan to present it to Kathleen and to you, and see where we can go with that.
we'll come back to the whole board, but I think the essence is, Carol's question included, you've got to define what it is you do, and then you got to define who wants it, and what is the opportunity to produce revenue as a result of it, okay? The sidelights are changing minds and hearts about what we do. Won't you be my neighbor? The mural on the wall behind you is part and parcel of what we think we are. But there are people, and powerful people, who want to put a label on us that inhibits it. But what is happening with Brian and the friends is the response from the public is, you can't take away my neighbor the public broadcasting system, because what it does for me, it gives them oxygen. It gives them insight into the world that they want to live in. And we don't know the parameters and the dimensions of that interest, but I'm very encouraged that we've tripled our membership and that we've raised $500,000 in this economy. Think about all the barriers to doing that exist over this last several months and this year. So to me, it's inspiring you to reach into that creative mind and let's start the dialogue. And, you know, say within the next 90 days, let's have a plan. Let's not let this be stale, but let's drive it in a direction that makes sense to all of us and see if, for example, we need to take some of this money that they've set aside and invest in something that may produce 5 or 10 times the revenue by virtue of what we're doing, and as a primary sidelight, change minds and hearts. Let them know how valuable we are and that they should be investing in us too. I think that's possible.
I love that challenge.
I think one of the things that this whole team, since I've been a part of it, has done really well is the creative content that's made, the Mountain Stage, the all of the products that are specific to Appalachia. But I think that's where what's going to carry us through going forward is, like you mentioned, creating that creative content that fits those niches within the country that's not being served right now. That's what they're going to jump onto. That's what's going to bring grants to us rather than having to go find grants because of the value that's being put out there. It's just a matter of where West Virginia is small, getting that on a national level where it's recognized and seen. And I think you guys have done a tremendous job doing that with the things that we've done. We've just got to multiply it tenfold in order to create a financial model that sustains and is independent from the government and, is covered by the folks that you mentioned that, grassroots said, you're not taking away my public radio. Here's my money. And from the Friends Board, we've done what we've always done in terms of doing that outreach and trying to but we haven't done anything extraordinary. This has come from them and, the political system that has charged them to make a donation to support it. I wish I could take credit for it and say, the Friends Board went out and got this, and they've done a lot of work, but a lot of this was just, visceral reaction to what's going on right now. And I think now is a good time to try and create some of this synergy, with other areas that are trying to do the same thing that we are and come up with some really solid Appalachian content that speaks to the nation, not just Appalachia, because the stuff we struggle with is no different than, any other area. It may have a different name on it, but, it's the same interpersonal issues within classes and government. And, there is a sound audience out there that's waiting, for this. So I think if we provide that content, we'll have a model that you can monetize and that folks are willing to buy into.
Let me add one more component to this. Brian, you have also brought oxygen to us. And Kathleen, going forward, I want Brian to have a slot on this agenda because we have the money, he has the responsibility and capability of raising additional monies, and we ought to be synergistically working one with the other, not two separate entities trying to get to some undefined point in space and make this a combined effort that produces extraordinary results. So if you would accept that to sit with us, and I will make a motion that we add Brian as a member of the Foundation Board in addition to his duties as the chairman of the Friends. Do I have a second, Ted? Thank you. All those in favor signify by saying aye.
Aye.
Thank you.
Can I say one more thing?
Yes, you
And this is, of course I am. Okay. Because I've had a couple people reach out to me in the past few weeks who wanted to give significant donations. Okay. And I'm not sure that, because Marilyn being gone and Kathleen, being pulled in many directions, I think we need some kind of effort, or at least something on the website or something that goes out that says, if you need to talk to somebody, here's the person to talk to. But it's not Kathleen, because she's got too many other things going on. But nobody's going to push the donate button and give $100,000. Okay. So that, I think, those people out there that have something that they want to give in a large way needs to be kind of available, that they can find out who they need to talk to about that. I'm done.
I'll get that, taken care of.
And this is Barbara. I would like to make sure, Mike, one of the disadvantages of this room is your back is to the screen, I think, that has our chat and what we're saying. And I wanted to echo what Carol said. I think her comment was two parts. One is, do we have the data that says, and I don't know how we would get this, what portion of the us and them audience goes beyond the traditional public media audience, and two, what about marketing? And I think marketing is a very big issue, and I don't know whether we want to assign that to Trey or whether that should be something the board should do. But I think we want to get, or the Friends Board for that matter. That's something they think about all the time. How do we expand our friends? And what means do we have? And to me, that might be a legitimate expense in the future of thinking, how we can better market outside the people that are already watching and already listening.
I agree with you, Barbara, and I think part of today was to introduce everybody to us and them. I think Trey's done a terrific job of doing that, but also to give us those nuts and bolts aspects of what marketing do you do, what have you done, has any of it been successful? If it's failed, tell us the pros and cons, and it's certainly worth an investment to get this show out there, because to me, this is as valuable a property as Mountain Stage if we do the right thing. And we've just got to know more about it in order to pump it up and let it be the float at the Macy's Day Parade next Thanksgiving.
Ooh.
I like that. Yeah, thanks for that. I've got a lot more specific things that I'd probably talk about offline or maybe to you, but yeah, that this feels real good.
Okay.
Maybe Trey K bobbleheads.
Anything's possible.
At the parade.
And to your point, Carol, if you have major donors, even though Kathleen has lots to do, major donors ought to be sent to her at this stage, because she's been in development, she knows it, and she's got the clout that people who want to write big checks, they want to know that somebody in charge is taking care of them. And
Right.
all the people we have right now, I think Kathleen is the one with the talent, the personality, and the energy to accomplish that. Okay? Anything else for the good of the order? Trey, how do you rate this session?
Oh, well, I rate it very highly. You utilized the word that you oxygen. It feels like oxygen to me, and this is great.
Go for it. Yeah. Everybody drive safely and enjoy the Christmas season, and thank you for being part of this team. Take care.
We have a motion to adjourn.
Motion to adjourn, granted.
Second.